I mean, this question comes from Brian out of the email questions. He asks, "You like Marex? Which of your peers do you own and or like, and why or why not?"
Um, so I had a guest post in KEDM where we spoke about the volatility basket, where I think Marex and StoneX are the two most similar. They clear futures predominantly. It's a futures commission merchant, FCM. And then sort of adjacent to their business or very similar are TP cap in the UK and BGC, which is Lotnick's company, which it's a lot more OTC trading and a lot more voice driven. And they haven't been formed in the last year. And I spent a lot of time trying to figure out why Marex and StoneX have been compounding at the extremely high rate that they have, and TP cap and BGC haven't. And I just think that in the voice, the OTC business, there's so much more value with the actual brokers, the employees. So there's a lot of competition for brokers. People get competed away all the time, get hired away. So I actually just like Marex and StoneX. I don't own StoneX at the moment. It's it's probably similar in terms of quality. It's slightly less levered. So maybe I'll split my position over those two names over time, but the majority of my position is Marex. Like you said, I got it about a year ago. They IPO'd in April or May of last year, which is why it got into one of the KEDM monitors. And you briefly owned it. You told me about it. I
Yeah, I
think
made like $2 and then I don't know, I moved on.
you scare yourself out of your own position sometimes. But yeah, I've owned it since the IPO, and they've been executing really well. They're doing acquisitions at 3 or 4 times earnings, both synergies. Like synergies, if the larger FCM buys a smaller one, are extremely high. If both of the companies clear futures at CME, you just go back to CME and say like, hey, this is what we're paying, this is what they're paying. We're both going to pay the lower rate, so you have synergies on day one. So it's a consolidating industry, high synergies in all the M&A. They're buying their companies at 3 or 4 times earnings. And that's why it's, and there's a tailwind that we're just trading more futures every year because hedge funds want to speculate versus just commercial companies that want to hedge. So yeah, it's been growing earnings at 30%. It's still trading at 9 or 10 times PE. It's been almost no multiple expansion. It's just been driven by earnings growth. I think it will be a long-term holding for me.